Good morning, Wall Street. Well, it was just a week ago that we did a video on how to day trade a big jump in the market. Well, obviously yesterday's action was a big drop in the market, and we thought we'd look at those indicators again and see if the same indicators worked in principle, but in the opposite direction. We can clearly see that the market opened up to the downside here. We're looking at a 5-minute chart of the S&P futures contract, and this is a plot of the regular sessions trading action. Clearly overnight the market had been very weak, and hence the big gap to the downside. Now we're looking at our value lines here as we did a week ago, and the resistance level, which is in red, never got touched. In fact, neither did the green support level. And as we've said in previous videos, when the market trades below its green support line for the day, day traders should have a negative bias on what trades to take, which means you take the short side and don't worry about any brief rallies here. And we also have these thick blue lines, and that represents the range of the first hour's trading. The high was right here for the first hour, and the low was right here for the first hour's worth of trading. Once we got past that low, the market never came back above or into this range. The low for the first hour turned out to be resistance for the entire day. That's fairly typical of big days, either up or down, that the range of the first hour is never seen again for the rest of the day. If you weren't lucky enough to get in right at the open here and trade the market down, the rest of the day's action was not that easy to trade, and we noticed that a week ago. These indicators are designed to keep you away from choppy type action and to put the odds best in your favor. So here we go. First thing we want to do is we want to change the candlestick chart here into the Heikin Ashi. So we just simply go up to our software program and click on that, and we've turned the plot into Heikin Ashi candlesticks. Now Heikin Ashis, go ahead and Google it. They're a different animal than your normal candlesticks. You should take that into account. But the idea here is that the color of the body gives you the prevailing trend, obviously on a short-term basis here. We're looking at a 5-minute chart. We're looking for that to confirm what little setups we might get during the course of the day. As the market went to a lower low here, you can see that the program itself colored a positive divergence in our volume swing indicator, which means that this decline on a short-term basis was becoming mature. Our rate of change indicator had already moved above its moving average line here, so you had some early indications that this move down to a lower low was a little bit long in the tooth. So the market rallied, but we're not taking long trades here because our bias is negative. We're waiting for the volume swing to get above the zero line and then to move back below the zero line, which we got right here. And it took a little while longer for the adjusted rate of change indicator to move negatively, but there it is right there. So you have a trading zone here, which is a pretty good one because the market basically fell apart after that. It had tested this first hour low several times, and in fact during the midday hours it just banged on it bar after bar after bar and finally gave up. The idea behind these indicators is that it kept you out of the market during this period, which was really difficult to trade. And you could have traded this down cycle all the way through till here. You did get a little bit of choppy action in the rate of change indicator, which in itself tells you that there's not a lot of meat left on the bone for short sellers. You also had another positive divergence with this move lower in the market. So those were warning signs that perhaps the market was again long in the tooth to the downside. And of course our adjusted rate of change went back up above the zero line right there. And you had the Heikin Ashi turning green here. So we hope that helps, and we'll see you next time.